Hello everyone, welcome back to our auto accounting series. In this video, I am going to discuss what is Anglo Saxon accounting and how you can use this configuration in auto accounting module. What is the definition of Anglo Saxon accounting? Is a method used primarily in English speaking countries like the United States, United Kingdom, Canada, and Australia. This approach is heavily influenced by financial markets and investors' needs. So I'm going to dig into our Odoo ERP system. So I'll search for Odoo accounting module. In Odoo accounting module, in configurations, in settings, you can find this configuration Anglo-Saxon accounting. You can enable by checking this checkbox and save these settings, and this Anglo-Saxon accounting's configurations will enable into your Odoo accounting system. If you cannot find this Anglo-Saxon accounting in your auto accounting configuration, you simply have to go into your setting module and you have to enable your developer mode. After enabling the developer mode, you can easily find this configuration into your auto accounting module. Now going back into our auto accounting module, so let's start first with the purchase module, how these transactions will impact. So I'm going to open a table so you can easily understand how these transactions will impact into the purchase process and how these transactions will impact into the sale process. So in purchase process, when we will make a purchase order, there will be no transaction impact will come into our journal entries or journal items. When we receive those stock, like we make a purchase order, now we are going to receive the stock from the customer, sorry, from the vendors. Then our stock valuation account and stock input account will be triggered. Our stock, because both of the both chart of accounts have nature asset. So when we receive something in our stock, so it means stock valuation account is going to increase, so transactions will be shown to the debit side. And because now stock is moving from input account to the valuation account, so this chart of accounts will be decreased. So in decreasing, assets show the transaction onto the credit side. So, for example, we receive this product from the customer. There was some bugs, there was some issues with our products. Now, when we make a return for these products, so these transactions will impact opposite to the previous one. Like in this case, stock valuation account will be decreased as I said, so it will show transaction onto the credit side, and stock input account, which is previously showing, which previously decreasing, now will show the increase in increasing transactions and show transaction onto the debit side. So for example, we receive the products from our vendors. Now we have to make a purchase bill. So at this point, like when we receive the products, we are going to pay the bill for these products. You can see there is no expense account trigger, or there is no expense account, expense transactions, um, uh, no expense transaction occur in this process. Only the expense transactions will occur into our sale process. So in purchase bill, when we are going to pay to the vendor, so account payable account will increase because we have to pay these transactions to our customer, because this is to our vendor. So because account payable is our liability, so whenever liability will increase, it show transaction onto the credit side. Tax account, because when we are paying some tax on our vendor bill, this is our basically assets, because in the end of the year we will claim these tax from the government. So this is basically our asset. Now tax, when we pay something in tax to our vendors, so this account will increase, but due to the assets in nature, the transaction will shown to the debit side. Same for stock input account. Stock input account, if you look into the stock input account, so your stock input account is also asset, and when it will increase, so the transactions will show on to the debit, and can also show into the credit side. It really depend upon the your transactions nature. Registering payment, when we register the payment, like we create a purchase bill. After register the payment, now we are going to pay the customer. When we register the payment that we pay to the customer, account payable account will be decreased, and it will show transaction onto the debit side. The outside, all these transactions will move into the outstanding payments. This account is liability by nature, so it is increasing, the transaction will show onto the credit side. After reconciliation, outstanding payment account will be decreased, transaction will be shown to the debit side. and it will hit all those transactions into our bank. We have our post, will post all those transactions into our bank account. Bank account is basically assets, and transactions will be shown to the, because this account is decreasing also, the transaction will be shown to the credit side. So let's move into the example how this works. So in our Odoo accounting module, first we'll go into the purchase module. In purchase module, first step we have to do, we have to find the products on which we are going to work. For example, this product was table. This product is table. So this is our dining table. In dining table, I will click on dining table. In dining table, I'll click on the category. In category, if you can see, my inventory valuation is basically automated, because all this process will happen automatically, and all these transactions will impact into our different chart of accounts. So I selected inventory valuation as automated. There are basically two options, manual and automated. You have to select the automated here. After selecting the automated, system will automatically pick the some chart of accounts which are using by default into our auto accounting module, and use these charts of accounts here. If you do not want to use those chart of accounts here, you can also pick your own chart of accounts, or create your own chart of accounts, and can use those chart of accounts here. So in our case, stock valuation account is stock valuation, stock journal is basically inventory valuation, and stock input account is stock interim received, stock output account is stock interim delivered, and cost of the production. So if I open all these chart of accounts which are basically using here, so so this is basically stock valuation is current assets by nature. Stock interim account received is also current assets. If I talk about stock interim delivered, so this is also current assets by nature, and cost of production is also a current assets. So this is our product sale is income account, and this is our expense account. So now moving further, all these settings are already configured into our system. So I'm going to create a quotation. So I create a quotation for our customer, Anita. So for Anita, I select this product, dining table, or search for the table here. So this is our dining table products, and I say I'm going to purchase these 5 products from the customer. This is basically 575 after adding tax 15%. So I'll save this, and if I open our accounting journal items here, and I'll select journal entry here. So you see 500 is not posted yet, because if I look into the table, if we look into the table, so in purchase order, no accounts affect. The accounts will only affect when we receive products from the vendor. So I'll confirm this order. After confirming this order, I'm going to receive these products, and I'll validate these products, validate this receipt. So now these receipt is validated, mean we receive these products into our stock. So when I go into the journal items and I refresh this page, when I refresh this page, now you can see 2 journal entries are shown here. One is stock interim and one is stock valuation. So stock interim received account is crediting here, and stock valuation account for the partner Anita Oliver, this account is being debit, because this account is increasing and this account is decreasing, because our stock moved from our stock received account to the valuation account. So this is basically our credit, and this is being our debit here. So this is our the 2 journal entries posted. If I look into our table, so same behavior system wants from our transactions. In Anglo Saxon Accounting, stock valuation account will in debit, and stock input account will be credit. Now what next? What next after purchase bill? Now we have created we received the products. I'll go into our purchase order. Now we have to create a bill for that same vendor. So I will click on create bill. So in create bill, when I confirm this, if I look into the journal items also, so you can see these three accounts will hit here, stock in Taram, because this is received, and this is going to be debit, and tax paid account because we are paying something, and this is our assets, so this will be debit, and account payable account which we have to pay to our customer, to sorry, vendor, so this is liability. It will also increase, and this will show transaction onto the credit side. I'll confirm this vendor bill, select a date here. When I confirm this vendor bill, so these transactions will be posted into our journal item. I'll again search for our journal entry here. So now when we look into our same account, this is basically our 007 is our transaction. And if I look into our journal items, if I go into the our purchase order here, and if I look into our receipts, so when we confirm this bill, now you can see these transactions will be effect into our order, into our journal. So when I refresh this one and I search for this bill here, these transactions, so if we look into here, so after confirming, like when we confirm this bill, and after confirming, you can see there is journal items which are going to be hit: stock in interim account, tax paid account, and account payable account. And these accounts are being debit, like the stock interim account, because we are going to receive the stock. Okay, so this account is being increased, and this is showing debit transaction, tax paid, and account payable, which is basically we have to pay something from our account. So this is our liability, and when this account will increase, the transaction will be shown onto the credit side. So after clicking onto the pay button, so now I'm going to register this payment, and when I'll click on this button and I'll create this payment. Now when I go back into our journal items and I select back into our posted and journal entries, so if we look into here, this is our bill, and then bill, the previous transaction which system is showing us 575 and 575, which we discussed earlier, that all these transactions will be posted when we are going to create a bill. Now we register payment against this bill. So what the system, what impact we want here, in after registering the payment, account payable account should be decrease, outstanding payment should be onto the onto increase, and when account payable, the impact should be onto the debit side, and outstanding payment, the impact should be on our credit side. So let's look into when we register the payment, because these transactions which we are looking into here, so these are our previous transactions which we observe into our purchase bill. When we created purchase bill, these transactions happens. Now when I look for our the same amount 575 here, so when we will post these transactions, like when we confirm this payment, this system will automatically pull these transactions, transfer this bill into the in payment, and hold all those transactions into our outstanding payments. Like this is outstanding payment, and when we reconcile those transactions, then system will transfer these transactions from outstanding account to our bank account. So this is basically a process how the purchase process works. Now in our next coming video, I'll discuss how the sale process works in Anglo Saxon accounting, and how those transactions and expense transactions impact while we sell something in our Anglo Saxon accounting. If you like this video, please like and share this video with your other friends who are learning Odo. For now, keep learning, keep growing, and have a good one. Bye.